accounting
Yeah.
and accounting firms, and talk a little bit about what Mindbridge AI does first and how it is enabling accountants to free up some of their time so that they can focus on the hard issues in their client's business.
So let's first of all look at the accounting world. The audit world has not changed in the last 100 years. And there are two key elements of the process that are problematic. Number one, the notion of sampling. Even before big data, accountants, when they do the audit, follow the rule of sampling. What is sampling saying? Sampling is saying that the analogy is if you go fishing, if you like fishing, and you go to small part of the lake and the fish is not biting, you're saying there is no fish in this lake. The reality is that when it comes to fraud and errors, they are random. And the absence of errors in the sample is not indicative of absence of errors in the whole data set.
Right.
Tack on top of that the big data problem. So now it's got amplified. So this is major problem. What we do is 100% testing. Fully, we take all of the transaction and we run them through a whole set of algorithms. That's number one. So we solve the sampling problem where you can oversight of finding an error. The second issue that exists is that the current tools are based on rules. Rules, in order for you to develop a rule, you need to know the rule. So if you know the rule, you can circumvent it. So if you are, for example, talking about one of the rules, you don't write anything over the weekend.
Right.
Or you don't, if you have, you don't finish it with zeros and things like that. These are rules that everybody knows and can be circumvented. When we deal with AI, we actually have 4 sets of algorithms. We start with the rule base. The reason we started with the rule base is because that's what the accountants are used to today. It will be a bridge too far to jump to AI.
Right.
Secondly, we use statistical methods like Benford law that identify if the data, they can detect if the data is synthetic or not. Then we use a whole set of other algorithms. We have what we call supervised, unsupervised, and expert system. So if you look at supervised, we basically do what we call reinforced learning. And this is where the big data, the value of labeled data becomes into it. We read the information, and if we find what we suspect, something unusual, we don't know yet that it is a fraud or an error. We highlight it to the auditor, and the auditor will reinforce. It's called reinforced learning. The auditor will say yes or no. Yeah, this is a problem. No, it's okay. So this reinforced learning enable us to learn over time. The other set is unsupervised. And unsupervised basically is very powerful because it enables us to work with different sets of data irregardless of the size of the company. Because you will ask, how can you detect error or anomalous functions in a $10 million company versus a $10 billion company? How do we do that? Because we use unsupervised data and we adjust our algorithms based on this particular company. So if your sale bill is $300 every month and for a $10 million company, but it is much larger for the $10 billion company, we will detect that it will not readjust it, so you don't have to do anything manually. The last piece that we do it's called expert system. So in any critical, let's say flying an airplane, what do? You go to the expert, or a car, it's a good example, Tesla. They go and talk to the people that are really good drivers, and you find out how they will do certain things. And based on this experts, we actually created some of our technology as expert system knowledge into it. Then we wrap it all of that when we cross correlate all of this together. So when we run a transaction, I said we run 100% of the transaction, we actually then correlate all of them. We run all of them together. And we've proven that the AI capabilities is anywhere, empirically we proved that between 10 to 1,000 times more powerful than just the rules alone.
Wow.